Yeah, it's a fascinating observation, and you can see it in the volatility. You can see it in the people involved in this market. Like you said, they're getting access to risk that used to be held for accredited investors. But why was it held for accredited investors? And that's one thing I see that you're doing, Raoul. You're so passionate about the financial education. And I think you once said Bitcoin is the best chance for the median person to radically expand their economic horizons. And it's an interesting concept. Just by trading crypto, you learn more about money, or you get more comfortable about money than probably you ever have in your life. And we're taught from kids that you're not smart enough to manage your money. That's what the fund managers do. That's what these people do. And this is a way to have a real relationship with your money in a way where a conspiracy theorist would say, okay, the governments and the banks don't want you to. But regardless of the motivations, it's been something that's been missing in the past. But crypto changes all of that, right?
It really does. And also think about it. I try and think of the world in different people's eyes. And let's say you're the typical millennial kid who's now 32 years old, I think the average age. So you're just starting to come into peak earnings. You've got no savings. You've still got your student debt you're trying to get rid of. And then you look at real estate. So look at traditional investments. So what are investments? Investments are basically future consumption. You buy something now, you hope to sell it at a higher price to give you consumption in the future, right? When you retire or whenever it is, right? That's what an asset is to us in the investment world. So what assets do they have? They have the equity market, all-time record high valuations. They have the bond market, all-time record high valuations. They have the real estate market, all-time record high valuations. So traditional assets to them, they're buying very expensively. Now, if you look at the size of those markets, equities, bonds, and real estate on a global basis, like global real estate's about $100 trillion. Global equities, global bonds, they're all like the $200 trillion market. And then you got crypto, the fastest adoption technology in all recorded history, which is the internet of money, where all of these things are going to be tokenized and will be part of this. It won't all be Bitcoin. Bitcoin's just one of the expressions of this. So that space is currently about $1.5 trillion today. So for it to meet somewhere around the equity bond market size, that's 100x from here. If it actually absorbs all of those markets, well, that's a 500x. So 100x, you, me, nobody in history, anybody has ever been given a whole asset class, an entire asset class that can go up 100x to $200 trillion. So, and it fractionalizes. So it doesn't matter whether you earn £20,000 a year or you earn £200,000 a year, you can both put 10% of your income in it because it's fractional. So now you're on the same playing field. Okay, that gets interesting. So we can all have the same percentage in Bitcoin, but then it's going to get more interesting because, like, if you've got an apartment in number 1 Hyde Park, that thing costs £200 million out of all of our reach. But the guy who owns it probably bought it for 100 million. He's made 100%. He's made 100 million. But we can't. And the average apartment in the outskirts of London hasn't gone up as much. So how do we make the money? Well, we're going to tokenize real estate too. Because then maybe out of one of those fancy buildings, one of those apartments gets tokenized. So you can put in 10% of your net worth into it, and I can put in 5% of my net worth, and somebody else can put in 50% of their net worth. And because it's fractional and it's tokenized, we all get to participate without it just being the rich get richer. Fascinating. So there's a lot coming.
And so those millennials are looking, even if they don't have a financial background, they're looking at, like you said, these other asset classes, and they all seem at their peak. And then they see something that potentially could grow 100x to 500x, and they have access to it.
And it's native on social media. There is crowdsourcing of information, the quality of information that's out there. Yes, there's a lot of noise, but the quality of information, the people who are trying to help in this space on Twitter, on Reddit, and all of these forums is extraordinary, even on TikTok. So people are trying to help you because of network effects. Means if you bring more people into the network, it goes up in value. And also people passionately believe in the point of this thing. So it is engaging young people, because also all of those millennials grew up in 9/11, 2008, and now the pandemic. they have no trust in institutions. They trust institutions implicitly in some ways, but finance is the big one that they don't, because their parents lost their houses and jobs. And so when you're seeing an opportunity that is social media in nature, that's native to the internet, that they understand and live in, that offers them huge potential reward, and they can stick it to the man, well, kind of gets interesting.
Right. And then that's probably why you see this exponential option on the back of it. And the way you kind of opened this broadcast out with that incredible explanation where, yeah, you had Facebook and you had this whole information layer here, but you never had the value layer, and you never had a value layer that was peer-to-peer and controlled by that peer group, which then leads to the adoption and the growth. And it's an incredible way of visualizing what's happening here. And I worry I'm in a bubble here, Raoul, that I keep talking to people like you and Michael Saylor and, CEOs of Aave and Charles Hoskinson, and everyone's telling me this, but when you say it, it just seems so clear to me.
Well, I go and have to head check myself, right? Because we're all in this space, we can get each other fired up. But I just use that adoption curve, right? If networks are valued in a certain way, then let's just go back to first principles. Okay, how is this network growing? What is going to derail that? Is bad news about Tether going to derail that? Highly unlikely. Is regulation going to slow it down? Well, I think regulation speeds up adoption, because then NatWest won't be saying, oh, don't use Binance. They're like, okay, fine, you do what you want. Here's the rules. So it's very difficult to find a world where adoption goes down. And at this pace of adoption, it feels very difficult indeed. So I just try to first principles, keep out of all of this, because everything sounds amazing. And we don't know what's going to go to zero and what's going to go exponential. But generally, it's that network adoption model. That's the truth.
Yeah, that's such a great point, and a great way to ground yourself whenever you feel like you're in the echo chamber. Go back to the first principles and just look at the order, look at that growth and say, okay, I can't argue against this at all.
And the other easy one for people who don't really know how to do that is, there's free charting platforms like TradingView. You can just chart a log chart. All exponential assets basically look like a beautiful trend channel in a log chart. So Facebook looks like this, Google looks like this, Apple looks like this. Well, actually, when you're creating a log chart, they're this lovely linear trend, log trend. And Bitcoin is the same. And if that changes, that log trend from 2010 till current day, if that changes, then you can reassess. If not, the ups and downs, the noise, all of the screaming and shouting on social media, forget about it. Just follow that chart.